Welcome to the Business Funding Strategies course. In this training, you'll learn practical ways to get funding for your business without the confusion or overwhelm. Many business owners think funding is only for big companies, but the truth is, you don't need to be established for 10 years to access capital. By the end of this course, you'll know how to build business credit, find grants, access loans and lines of credit, explore creative funding options, and position your business so lenders and investors say yes. Let's get started. Before we talk about outside money, let's cover bootstrapping, funding your business yourself. Bootstrapping means using your own resources to get started. This could include savings, personal income, selling unused items, or reinvesting early profits back into the business. The benefit of bootstrapping is control. You don't owe anyone, and you're building from a place of independence. The key is to keep expenses lean. Focus on what truly drives revenue and delay anything extra until your business can support it. Business credit is your company's financial reputation. The 4 foundation steps are: register your business as an LLC or corporation, get your EIN and business phone address, open a business bank account, start with vendor accounts that report, like Uline or Quill. Over time, as you pay invoices early, your business credit score grows, and that unlocks higher limits and better funding options. Traditional funding is what most people think of when they hear business loan. Options include bank loans, usually require 2+ years in business, financial statements, and good credit. SBA loans, backed by the Small Business Administration, lower rates but paperwork heavy. Lines of credit, flexible access to funds you can draw as needed. Business credit cards, great for expenses and building more credit if used responsibly. The key to approvals is preparation. Lenders want to see organized finances, steady revenue, and strong credit. Not all funding comes from banks. Let's explore creative options. Crowdfunding, platforms like Kickstarter or GoFundMe. Let your audience fund your idea. Revenue-based financing, lenders give you money now, and you repay a percentage of future sales. Equipment financing. If you need gear, you can lease or finance it instead of paying up front. Factoring, selling your unpaid invoices to get cash quickly. Creative funding can bridge the gap when traditional loans aren't available. Grants are free money but competitive. Where to look: grants.gov, federal grants, local economic development offices, corporate grants from companies like FedEx or Visa, nonprofit and community foundations. Winning grants comes down to 3 things: matching eligibility, clear business story, following directions exactly. Even if you don't win the first time, applying builds your skills and gets you noticed. Another path to funding is investors. Types include angel investors, individuals who invest in exchange for equity; venture capitalists, firms that fund high-growth startups; joint ventures, partnering with another business for resources and profit sharing. Investors want to see a clear plan, potential for growth, and confidence that you can deliver. Remember, investor money often means giving up a share of ownership, so weigh the pros and cons. Let's recap the major funding paths you've learned. Bootstrapping for independence, business credit for long-term growth, traditional loans for stability, creative funding for flexibility, grants for free opportunities, investors for scaling fast. There is no one-size-fits-all approach. The best strategy is often a mix, starting with bootstrapping and business credit, then layering in other options as your company grows. Your next step: choose one funding path to start with this week. Thank you for taking this course. Remember, funding is about preparation and positioning. The more organized and fundable your business looks, the easier it will be to unlock capital.